Sorry for the delay. I had an issue with my internet connection. Some reason the cable guy was here as I was just going to start, and my internet was not working. And I went outside and asked him, "Are you working on the cable or something?" And he said, "Yeah," but he hasn't done anything, and my internet was down. So that was really, really, really bizarre and really strange. I can't explain it, but anyways, welcome back everyone. Weekly Bitcoin trade. I'm using a different website called Tradingview. I don't know if you ever seen it or heard of it. It is a little bit different. I like it because of the white background. I don't have to turn off all the lights and everything, and it allows me to see a longer view, and it frames really nicely. In the camera. So, all right. So we are looking at it. I will go back to, let me see if I can go back to Bitcoin Wisdom here. Hold on. I have to change the view a little bit. Okay, so I'm going to go ahead and just take a quick look at bitcoinwisdom.io. And it looks like the short sellers are apparently running out of gas, and it looks like they're getting squeezed. Maybe I'll take a look. I'll go back to TradingView, but I just want to show you this, and it looks like the price is holding. The price is holding. Never make a judgment. Never make a call on the current candlestick. Okay, we're at 19,600. Let's just say 19,600, which is better than it was last week. But never make a judgment on the current candlestick. It barely squeaked out a green candlestick last week, but I think we are in a range. We're in a short range here, and the fact that it hasn't crashed or tumbled, that tells me a lot. So I'm going to go to the laptop. I'm going to put in a poll. I'm going to ask, do you think there will be a short squeeze? Yes or no? Simple answer. Yes or no. And so please like, share, comment, subscribe. I'm gonna just hit off, get into the analysis. I'll talk a little bit about some other stuff. I'll go on to TradingView. I'll go to bitcoinwisdom.io. I'll use both of them, but I'll be right back, okay? All right, I'm back. Sorry about that. So, all right. So last week, I talked about. Oh, hold on. I could have sworn I. Sorry about that. Sorry about that. I had to. I just want to be totally focused on this here. Okay. Let me see here. I have to readjust the darn thing. Sorry for the low tech. Yes, it is very low tech. I realize that. All right, there we go. All right, so last week we talked about a possible short squeeze, a range trade. We're at the bottom of the range. Um, and I think that is the case here. Interestingly enough, all the other traditional markets are closing down lower or have been closing lower, and Bitcoin has been hodling or holding. I don't think that's a coincidence. Do not make a judgment off the current candlestick mark. I am on the weekly. I'm on the weekly right here. You can see it's a 1 week period. And that's usually what I can do with bitcoinwisdom.io. But with Tradingview, all right, this is Tradingview if you're wondering what this is. So with Tradingview, I can do a little bit more. And this is another site. It's called tradingview.com. They have other things. You can do other markets. But I'm going to show you this here. And oh, I don't want a 30-day free trial. Sometimes you have to pay for it. You don't have to pay for it. You just go on there. But it looks like there's a 2%, almost 3% increase as of October 3rd, market open. Okay, that's good. That's good. And what are they? That's on the yearly. So 1 year, you can see that it's very flat. This is on a year to year. I don't know what it's measuring, 1 year, or the time frame is 1 year, but I'm not sure what the candlesticks represent. But if you want to know what 1 year looks like, it looks like this. Let's go to all. And this is all. This is what it looks like throughout the whole thing. Another thing is that they do have a logarithmic chart. Excuse me. They have a logarithmic chart. So you can check out the logarithmic chart. I don't know how useful that is. As far as I know, logarithmic charts just show you the candlesticks so you can see it, because in the beginning there's very little price action. But if you wanted to see the price action on a longer period of time, that's where it's useful. It doesn't indicate anything. It doesn't indicate anything. So you can see that the pricing is very different. You can see that it's like $1, $2, $3. So for the range that it's at, that's what the logarithmic chart is good for. You could see the price action as it moves, so you kind of get an idea. I never use a logarithmic chart to do any charting because it doesn't make any sense. That's just my opinion. But if you do want to see the price because of the lower prices versus without the logarithmic chart, you can see that it's very flat. It's very flat here, very hard to see. But if you wanted to see the price, then you would use the logarithmic chart. I don't think a logarithmic chart is worth doing a chart analysis because it just doesn't make sense. It's not, a lot of people use it. They use this little arching curve, or yeah, it's got to be an arching curve, because if it's going straight, I don't think it's going straight. Can I draw lines? I can't draw lines. I have to use the advanced chart setting. Or can I draw lines? No. I have to use the advanced chart the advanced chart. I don't want to go into that just yet on the Tradingview. But logarithmic, if you look at the logarithmic, this tells you it's hitting the top of the last halvening, so to speak. And This could be indication of a support. I don't necessarily believe that, but a lot of people will justify, using the logarithmic chart and doing weird things with it. I'd recommend not to use the logarithmic chart unless you want to see the price of what it was in the past and see how the price action looked like the candlestick. You can clearly see versus if I took it at a just normal view, you can't see the price action. It's so small. So the only reason, again, you would use a logarithmic chart is to see the price action, the candlestick itself at what it was. But again, I don't think it's very useful. But so here is, it goes back to 2012 to present day. This is the chart right now. And this is probably as good as it's going to get, all right, as far as what I can see. And this is, you see that is the last halvening right there. The last halvening, the last time the halvening occurred, and we're hitting, the chart is showing we're hitting the peak of the price of that halvening. So that could be an indication, because if I'm not sure if I'm able to move the chart. No. If you look at the last halvening from the previous halvening, which is this little thing right here, and this is where logarithmic chart is helpful, because that's so small. There, you want to look at the logarithmic chart here. There's probably a good correlation, not quite, but if you see this top right here, if I could draw a line, it actually doesn't even do anything, but there is a support area from the last halvening, and back in 2014-ish, 2014, to the current bottom of the previous halvening. So 2014, 2018, 2022. Is it 22? No, that can't be right. It was 2021, 2022. Yeah, it's about 2022, because the next halvening is 2024. So it's 2020. So 2020, 2016, and 2012. So 2012 was the halvening. That's correct. I don't know. Anyways, you see the price action during the halvening. You'll see the price action during the halvening. So my point is, there is some support level if you just base it on the previous peak of the last time it halved, or the halvening, and that is, and you see right here, there is the previous peak. So we're kind of close. I suspect we're not there yet, but I suspect we're in an area of support, if that makes sense. So this is the long-term view of the chart, and if you just look at the history, the last 10 years, this is 10 years, 2022, 2012. If you look at the last 10 years, all right, the price has gone up, all right? Price has gone up. If you just look at the short history, and I know it's a very short history, and it may be a little difficult for some people to take account, because maybe they're noobs, they haven't been around that long. But the simple plan is you buy when the market crashes. Ideally, what you want to do is you buy when the market crashes, and you accumulate Bitcoin, you hodl, you hold. Don't go to the exchanges. If you do have an exchange, take your coins off the exchange and put it into a private wallet, or I should say your own wallet. That way you own the private keys. And once you own the private keys, you're able to essentially hold onto those coins. They won't be confiscated. If the exchange goes bust, the exchange goes bust, you don't go bust. So do not leave your coins on the exchange. Do not leave your coins or money on the exchanges. All right. I would highly recommend just finding a person who has Bitcoin and buying it directly, peer-to-peer. That's probably the best and safest way. Also, you don't have to do any KYC. You can just literally just buy from someone. Usually they will sell at a premium, But if you look at the price history, all right, if you look at the price history, let's just go back to the last halvening. All right, the price was what in the, I have to go into the logarithmic chart. The price was like around 3,000. Okay, the peak, this is the last halvening. The price peaked out around 20,000, bottomed out around 3,000, all right? So let's say you paid $3,100. All right, you paid what, $3,100. Look at the current price now. It's at $20,000 and peaked out at almost $70,000. So just looking at the price action and the history, I'm on the logarithmic chart, okay? I'm going to go back to the regular chart. So this is the regular chart. So if you just look at this price, it's a no-brainer. It's a no-brainer. All you have to do is when the market crashes, and obviously there's been a market crash as far as in crypto, you start accumulating dollar cost average, whatever you want to do, or buy in a bulk if you think we're at the bottom, whatever it is you want to do. If you just held, if you just hodled, okay, you would have been rich. You would have been rich, technically. So when I see all these people, you know, the crypto traders, the crypto influencers, they only come around when we're in a rally. They seem to be nowhere around, nowhere in sight. They don't even make any more videos when the market starts crashing. I don't know if you noticed that, but yeah, they're not around when the market starts crashing. They stop making videos when the market crash. And they try to get you to buy in during the hype and during the bull run, but they don't tell you you should be buying when the market's crashing or close to when the market's crashing. So do I think we're near the bottom or at the bottom? I think there's a good chance we're very close. We're very close. I still think there will be a dip. There will be a dip. But I do think the shorts are going to have a hard time now. If you're going short, or if you're trying to sell, you're going to miss your opportunity. You're going to probably lose out or barely break even, but you're missing the long game. The long game is the price is going to go up. All right, the price is going to go up. By the nature of how Bitcoin works, the price goes up because reduction in supply. I don't even know why I even have to explain this. There is something very interesting going on. This will be the first time that I'm going to witness Bitcoin during a global recession. Okay. So the global recession is coming. So I'm going to go back to, so this is Tradingview. I just wanted to show you this longer term view. It does allow me to do logarithmic charts. So you can kind of see the logarithmic chart. It's only, as far as I know, logarithmic charts only show, or it's only good to show you what the price and the candlestick look like. So you're able to see the lower prices. I would not use this to determine a trend. All right, it's not meant for that. It's just that it's a chart that will show you the candlestick and the price on a very long time period. That's all it's good for. So I see a lot of people use this and say that, you know, they're trying to make a prediction on the price. I just don't agree with that. Another thing before I go back to Bitcoin.io, BitcoinWisdom.io, I will show you this other, I'll scroll up here. There's some other information. Bitcoin breaking 18th scenario. There's some predictions in here. There's some technicals in here. Before it was a strong sell. Now that the price is going up, they're neutral. It doesn't really help you make a prediction. It just tells you what's going on. There is some people here that will they write articles and they'll give you their take on what's going on. I was watching this a couple days ago. A lot of these were short. A lot of these commentating articles were like, I would say out of 10, 8 of them were short, 2 of them were long. And if you, oh, didn't want to do that. Okay, let's go back. All right. So a lot of these articles were saying it was to short. Now they're like, what are they saying? This doesn't say anything. This one's giving a long prediction. What is this one saying? Nothing, just giving you gibberish. Let me see. This one's still a short, bearish reason with some weird, looks like the Little Dipper. I don't know what this is. So some people come up with very strange techniques. Whatever technique that they use, some of the stuff I don't understand. What are this? Some people, nope, looks like this one's neutral. They're all going neutral. Some of them are going long. This one's talking about a range, which I've been talking about. We're in a range and it's going to break up. I do think it is going to break up. Let's see what this one is. Looks like it's not giving anything. It's a neutral. This one's still giving, this one's a bearish because it's looking at this triangle and it's showing that it's going down. So what I usually do, another thing you could do is take sentiment. You could do a sentiment analysis, which is basically, you could just simply just look at what other people are saying and get a sentiment. If there's more people like recommending shorts or shorting Bitcoin, I would go long, because remember how the market works. And typically a bear market and in a bull market, but especially in a bear market, what you notice is it takes from the many and gives it to the few. It doesn't take from the few and give it to the many. The markets don't work that way. The market takes from the many and give to the few. So no, I don't want, you get a bunch of pop-up ads. This one's saying it's long. Eventually you'll get enough people who are gonna say go long after the markets have, after the price has gone up. That's when you usually want to get out of your long position and take a short position after that, or soon after that, because most likely there's too many people who are long. The longs have exhausted themselves and they'll run out of steam, and eventually people will, get out of their position, which is a sell, which will then drop the price, or put in a short position or make a short order, and then that will cause a sell order. So you got to understand how the ebb and flow of crypto trading works. And right now, I still think there's not a lot of people in the market. Okay, the market participants have dwindled down. So what you're seeing is a lot of people just trying to basically take money from each other. It's trading on the exchanges is a zero-sum game. You are literally taking from somebody else. Someone else is taking the opposite trade where you are. They're going to be right. If they're right, they're taking your money. If they're wrong, you're going to take their money. The exchanges will always get a cut. That's how they work, because they set up the marketplace in which you can do it. Essentially, at this point, when you're in this kind of like the bottom of this bear market, where there's very low participation in trading, market participants, there's very low participation. You're basically you're gambling at this point. You're making a bet, and like I said, you're 33% right or 66% wrong. Here's another leg down, whatever. So there's some articles here that you could read. A lot of the times these people are no better than 30%, right? It's up, down, or sideways. That's all it is. And so you get some of this. This is Tradingview. So that's Tradingview. So here's another chart that you could look at if you're interested in looking at a different format. This goes to at least 10 years. It can go to 5 years. I like looking at longer term period because you'll get a better sense of overall where the price is going. This is a 5 year. If you look, we hit the price of the previous high of the last time Bitcoin halved, and we're hitting, and that's psychological. That's really psychological. You can see right about here as well, if I could zoom in. If you look at where the price is now, this is where the last time, or this halving, when the price started taking off, it hit up against the last previous high and then really busted out. So there is a great significance at the price that it is now. You can see the high of the last halving, this halving, this year's, or this halving I should say, as the price started breaking out, it stalled right here, only to bust out. So there seems to be some sentiment of support from people who are trading. That's all I can say. I'm not saying that is a support. It just looks like a support because of the last time the halving, that was a high. This time when we went through the halving, that was the breaking point. And now we're looking at after the halving, as the price started coming down, we're looking right here where these 3 points kind of meet up. And I can see where that could be a support. It could be a sentimental support. Not that there's anything really there. There is something there, but it's sentimental. I doubt people look this far back in time to make a judgment or trade on the call. You have to be like a very long term, play the very long game to look at charts this far. So if I go back out, that's what it looks like. But again, this is 10 years. If all you did was if nothing, if all you did 10 years ago back in 2012, if you just hodled, if you had just bought, and let's see what the price was 10 years ago. $3. It was $3. $1 to $3. Okay. I'm looking at this point right here. Okay, $1 to $3. If you bought $100 worth and you waited 10 years, it seems so stupid, right? And there was actually people who did buy $100 worth. They probably had like, let me see, $300, $3. Let me see, if they go up to 30, that would be 10. That'd be 10. $100 would have gotten you at what, like 33 coins, 33 Bitcoins. How much would that be worth right now at $20,000? Let me see, 20 times 30 would be 600,000. Am I saying that right? 600,000? Because if you had 10, that would give you 200,000. So if you had 30, yeah, 600, over 600, probably 700,000 in cryptocurrency. All you had to do was hodl. All right. I mean, I don't even know why I make this video, because it's so obvious just buy and hold, just hodl. That just makes the most obvious sense. Anyways, I'm just going to show you this. Let's go to the yearly, so you can look at the yearly. You can see it's really flattening out right here. A lot of people are just, I'm thinking the market participants, there's just not a lot of market participation for various reasons. Obviously, they lost their money. They don't have any more Bitcoins. There is currently economic recession going on. It's starting. So this is the first time that I'm going to see Bitcoin during an actual global economic recession. So we're gonna finally witness, I think the great use case of Bitcoin, because I have a feeling if it's anything like the last global financial crisis, the last time this happened, you're going to get banks closing. You could get asset forfeiture, or they'll seize your bank account or freeze your bank account. You're already seeing a planned recession to dampen inflation. Inflation's out of control. In order to fight inflation, the countries of the world are ruining their own economy to dampen demand for supplies, and so you're seeing all this crazy stuff. It's going to be interesting. This is we're finally going to witness the use case, the ultimate use case of Bitcoin. Let me see year to date. So here's a year to date. We're bottom. We've had all this time to bottom. I think if you look at it, you had all this time. If you look at the dumps, this dump, that dump, you had a lot of time to dump here, and I just don't see it dumping because it's people aren't dumping anymore. They're seeing the traditional financial markets. They're looking at inflation, and I think they're betting that Bitcoin will hold its value, not only hold its value, but also increase in value during a time where the markets are going to crash. The global financial markets are in a recession and, I don't know, possible depression and a looming possible chance of global war. This is very real. I'm not trying to make it up or scare anyone, but I think global conflict is real. I talked about this when I was riding my e-bike. Talked about it. There's a lot of things going on, and I think a lot of people are scared. They have a lot of wealth. They don't want to put it in the bank because your bank can go down. Your money can be taken from you, or you could be restricted in its use. You may not be able to withdraw your money. So I think a lot of people have gone the route of cryptocurrency. You had a whole generation of people who were greater fools. Some of them are truly fools because they bought into NFTs and Ethereum and all these other altcoins. All they had to do was just hodl Bitcoin, and that would, for the most part, be it. But some people are just the ultimate fools. Anyways, so let me go back to this right here. There we go. On Tradingview, I think you can use the charts. I have to go to a different thing. Oh, you know what? Let's see if I can do that. There is an area right here that says see more advanced chart. Let's see what happens if I push that. And okay, it does take me to another thing here. Will it allow me to do lines? Yes, it will allow me to do lines. Let's see here, and it is on Bitcoin. It's a 1 day. I like it to be, let me see, a year. If I change it to a year, it does let me do a year, but it doesn't allow me to change to a month. It's on a 1 day, and it's doing a pop-up ad. Okay, let's see here. Let's see if I can do something. I'm not very familiar with Tradingview, so you have to excuse me. Let's see, it's on a 1 day. Let's see if I could change that. Can I change that? Alert, advanced, paste, lines, settings. Okay, simple stat, trading, events, price source, candlestick close. I'm gonna have to get used to this again. Okay, let's just cancel that. I wanted to change it to a monthly or a weekly, but it's not changing. And the pop-up ad is coming. Yep. Okay. Let's do a line. Let's just do a line. Let's do 5-year, or okay, 1 year. We'll do a 1 year. Let's just draw a line on this trend line from here. Oh my God, I don't even know what I'm doing. To here. Why can't I draw a trend line? Okay. Okay, how do I get rid of this thing? I don't. This is why I hate this. Okay, let's go back. Oh, I don't want this. All right. Let's go back to this one. Let's just go back to this one. Gosh, I'm a simple man. Let's just draw a line here to here. And what do you know? We're right at that trend line again. I don't think the market's going to give you a lot of opportunities to do another short. I think it's going to break that trend line. Not only will it break the trend line, it will hit up against the 30-period average, which is right here. It's going to hit up against this 30-period average right up here. And then most likely it will go back. It will go back down. I think we are still on the last leg of this bear market. The interesting part about this whole thing, okay, and let me draw a few other lines here. Okay. I'll also draw a few other lines. That's not what I wanted to do. Okay, let me draw that line again. Okay. That line, one more line. There we go. Okay. All right, so I'm drawing a couple lines. I'm drawing the overall trend line. All right, this from the top here to top here, and we're right here. I'm drawing the recent high, recent low right here to show you the range. And what you're simply seeing is basically you're seeing the trend go down. It's obviously hitting up against, I think, some support here, or the exhaustion of sellers. In other words, there's no more sellers. And even if people wanted to short, there's not enough market participants to continue to push the price down on a short. So they are getting out of their short positions, which causes a buy order. And they're squeezing each other out. That's what's happening. The people who've gone short are squeezing each other out. And that's why you've seen the price not go down any further. Matter of fact, it's maintaining. And also, it's most likely going to break that trend line. And I think I've been saying that for the last 3 weeks, maybe even 4 weeks. I think when I started, I was right here. I was on this particular candlestick. So 1, 2, 3, 1, 2, 3, 4. So 4 candlesticks ago, if you include this candlestick or this week's candlestick, which again, do not make a trade on the current candlestick because it's going to be moving. It's going to change. But I do think that you're also in the bottom of a range. It's ranging. It's hit up against some kind of support. Now, whether it's the support that I was talking about, let's see, go back to Tradingview. Let's go back to all. If you think it's the support from here, and also where from the last, or this current halvening, which was it 2020? I think it was 2020 was the halving, wasn't it? Or was it supposed to be 2022? Anyways, no, today is 2022, so it's got to be 2020, sometime in 2020. Anyways, this halving right here at this period in time, you can see where the price broke and started pushing up. You could probably see it better on the logarithmic if I show it on the log here. Nope. I know where it shows a lot better if I do the 5-year. There we go. So here's the last halving, the high from the last halving. From this period here, everyone's anticipating the halving, and look, it stalled out here and then broke out. And you're seeing the current price here, and that's where it's supported, supposedly. So you're seeing some support, and then this range, you're hitting the bottom of the range, going up. So I do still think there is a play here. And I think there's a good play. And also, I think Bitcoin will also be tested because the world markets, the world financial markets, they're going through a recession. They're going through possible liquidity crisis again. Everything back in 2008. Everything again back in 2008. So what you're looking at is the ultimate use case of Bitcoin. Finally, Bitcoin will be tested. This will be the ultimate use case of Bitcoin. Not only that, not only do we have the global financial markets possibly going into a recession, you're also looking at World War III, possible global war. So there's a lot of things here at play. I think a lot of people want to be safe. It wouldn't surprise me that there is possibly a short supply or starting to become a short supply of Bitcoin or cryptocurrencies out there. Possibly going into anonymous coins may be really a big thing, possibly. But I think a lot of people are moving to the most well-known cryptocurrency, which is Bitcoin. And they're either buying it peer-to-peer, open market as much as they can, buying on exchanges and pulling everything out of the exchanges and putting into a wallet where they own the private keys. And it's possible that you could see supply shortages with cryptocurrency, high demand for cryptocurrency. These are all very real. And I'm just talking in general in the future. So ultimately, the test, the final use case, I think the initial use case of owning your private keys, so your bank accounts won't get freezed. You'll be able to use your private keys, trade peer-to-peer, probably. This is the use case that I think the hardcore users, the original people envisioned for Bitcoin to be used, because we're going through another financial crisis, going through another recession. And I'm not talking about, local, like in America or China or Russia or Europe. I'm talking about global. This is a global recession again. So we could see the use case finally come to fruition, because back in 2008, that's when Bitcoin was created. 10 years now, more than 10 years. 2022, 2023, we're probably going to see the global markets go through a financial recession. We're going to see how Bitcoin does. As far as price, I suspect that it will go up. I suspect that the financial markets will go down because everybody's trying to get into cash. So they're getting into cash. but even the cash is not safe. They need to go into something where they don't have to physically store, because you have to physically store cash, because there's a chance that if you have it in a bank account, that money could be taken from you. It could be frozen. It could be seized. It could be taken. You're looking at, when you deposit your money at the bank, it's really not your money, it's their money. And they may use that to bail themselves out when this financial market crashes eventually. Um, there is a planned recession going on. People are, the markets are going through a recession. They're crashing the markets on purpose because of the outrageous inflation going on. So there is some real truth to what I'm saying here, and I think people are opening up. At least some people are opening up to the fact that they can have something that they don't have to physically store. They have a private key. They have a digital wallet, right? They don't have to physically store it. They can do mnemonic 12, I think 12 or 24 to what, 48 mnemonic, words that you can remember or write down somewhere. There's a lot of things that you can do. You don't have to physically store this. I mean, if you go into gold or silver, you have to physically store it. You have to protect it. Guns, ammo, still very difficult to get, very high in price. So there's a lot of things going on. A lot of things going on. A lot of uncertainty. I'm just not seeing any relief in sight. So a lot of people are gonna. I think they should just move their money. In my opinion, they should just move their money. I'm not a financial advisor. Don't take my recommendation. But yeah, I think people are just moving their money to something they don't have to physically store. So you're seeing I think a decoupling in the financial markets and what Bitcoin is doing. Bitcoin's holding steady, could possibly even go up. I would even say as the market turns down, you can see Bitcoin going up, but it's not the start of the boom. It's not start of the bull market. It's most likely going to hit up against this 30 period average, because I'm on the weekly, that'd be 30 weeks. And once it hits up on that, probably some news, some event, something's going to happen to cause the price spike up to that point. Or the media is going to contribute to some event on why Bitcoin spiked up in the price or broke a trend line or whatever. But something's going to happen. And then after that period, it's going to most likely come back down. And I don't know how long, I don't know what price. I'm going to try to make a prediction on that. I still hold that position where by October 16th is what I said. Okay, so let me see. Let me pull here. Okay. So I said October 16th. Yeah, October 16, the week of October 16 is the time frame. We're getting closer and closer, like another 2, maybe 3 weeks. Yeah, about 2 to 3 weeks, October 16. 1, 2, 3, 3 weeks actually for October 16th. And it looks like it's going to break that trend line. And I think it's going to come out around 23,000. Probably hit up against this. Hit up against this moving average. By then, it'll probably be, 23, somewhere around there, 23,000. And then after that, it'll break down. And I'm going to go back to Tradingview. Let's see what this is. Nope. So I'm going to go back to Tradingview. And let's see any possible places where it's going to break down to after that. So that's the 5-year. Okay, so that's the 5-year. I'm looking for a place where the next breakdown in price could be. I think it's already at a certain point. I think the next breakdown in price could be right around this right here, whatever this high was. Probably right about here, which what would that be? What would that? This is in percentage. It's not telling me in the price. Okay, that's price. That's a percentage. It's not telling me what the price is. Let's have to look at the log. All. All right, where is it? Okay. Okay, let's see. 5-year. All right. Yeah, it looks like 13,000. 13,000 could be the next price going down. Somewhere around there. I think somebody else mentioned that earlier in my one of my live streams, in my first live streams. So 13,000 is probably the next support price. I still think my position right now, or my position right now, or my opinion right now, is that it will break. It's going to break out of this trend line, break from this longer trend line right here, because it's not working. It's not pushing down the price. All the short sellers out there or people in short positions they'll get squeezed out. They're going to have to get out of their position, which causes a buy order, and that will drive the price up. Essentially, what's driving the price up is really there's not enough sellers or people taking more short positions to drive the price down. So they're getting out of their short position, which is causing the price to go up and knocking out everybody else if they don't get out in time. That's what you're really seeing. I don't know if people are really buying Bitcoin. I think some people are, but it's not reflected in the exchanges. It's not going to show up on the exchange because most people who are hodlers, who are buying, who are going long, they're not on the exchanges. So you're not seeing it. Although people who trade peer-to-peer, they'll use exchange prices, they're not on the exchanges. So all the activity that's going on outside of the exchanges, those are not accounted for in the price, which is great if you got a low price and you're buying it up. It's not driving the price up. The other thing is if people outside of the exchanges are buying up all the Bitcoins, there is a less supply of it on the peer-to-peer market, which then drives people to the exchanges to buy Bitcoin, to pull it out of the exchanges. That causes demand, that causes price acceleration to go up. But I don't think we're there yet. I do think people are hodling. You should be hodling. And if you look at the overall, if you just look at the chart for the last 10 years, let's get rid of this logarithmic. If you look at the chart in the last 10 years, 10 years ago, if you bought Bitcoin at $300 with $100, right now you would have 600, probably over 600,000. You probably have 700, maybe $800,000 worth of Bitcoin, and we're in a bear market. So I don't even know why I even say this, but yeah, just hodl, just buy and hold, wait 10 years. Even in a bear market right now, you're up. You're up like 1,000,000,000%. if you bought back in 2012 at $300, $100 worth. So if this is an indication of history, if we look at the history of this chart, it's really a no-brainer. Does it really matter when you bought? As long as you bought and you hold and you held on, and I would say just hold 5 years ago. Let's have a look at the price what it was 5 years ago. Okay, I'm looking at the logarithmic chart. No, can't do that. Okay, let's just say $5,000. $5,000. All right, let's say you bought Bitcoin at $5,000 5 years ago. So you bought one Bitcoin 5 years ago. That one Bitcoin now is $20,000. That's 400% in 5 years. If you wait another 5 years, how much do you think it's going to be? I think the next bull run easily can go up to 100,000. So you paid 5,000. I'm just giving you a scenario based on the history of this chart. 5 years ago, which would be what, 2018, you bought at 5,000. You wait 10 years, and I'm predicting 100,000, at least 100,000 in Bitcoin price in the next 5 years. Then probably the next halving for the most part. Your 5,000 turned into 100,000. Even then, you're still on top. So it's very simple. I don't know why people make it more complicated than it is. I don't know why people who do chart analysis only come around when there's a price movement of some sort. Either there's a huge price swing up or during the bull market, or they come around when there's a huge price swing downwards. The crypto influencers, they're never around during the bear market. They're only around during the bull market. When in reality, all you have to do is just ignore everybody, including me, and just huddle. It's really that simple. Just huddle. So I do think, I'm getting back to the charts, I do think the price will break the trend line, go up to 22, 23,000, and from there it'll probably go down and continue the downtrend, possibly to 13,000, possibly. I'm not sure. We'll have to see how strong this right here, the 17,000 line, 17,600, how strong this line is going to hold up. I suspect it will not hold up. It's just, I think it's too early. I think it will go down further than that, but after that, you're going to be back into a range trade. After the range trade, up until maybe 2023 November, because the halving is around March 2024, somewhere around that time. So anywhere from 6 months to a year, you'll start to see the price go back up again. And by the time you realize we're in a bull market, it's too late. The price is extremely high. Then all the crypto influencers starts coming in and you'll start buying at the top of the market. You know how the cycle goes. Anyways, so that is my prediction for now, is that it's going to break this trend line, hit up against this 30-period average, which will be around 22,000, 23,000, 22,000, 23,000, somewhere around there. It'll bump around, consolidate, move around in there, and then eventually slowly, maybe even drastically, head towards lower pricing. I'm thinking around 13,000, but it's not definite. It doesn't mean it's going to go and stay around 13,000. I just think that's just the way the price action is going to move. And maybe around November next year, we're going to start seeing a slow price action movement upwards. Essentially, that'll be the start. I think that'll be the start of the bull market. By the time the bull market really catches on, it'll be too late for people to get in early. So you just have to get in late. That's how it typically goes. And we'll be into another halvening, another bull market, another higher price, higher high. I'm thinking at least 100. It could possibly go up to 200 with all the uncertainty, uncertainty going on. For example, global recession, global conflict. This is, I'm not sure exactly what's going to happen. This is going to be the first time Bitcoin has gone through a global recession. It'll be interesting to see what actually happens to the actual price. Anyways, I want to conclude this episode. Thanks for watching, everyone. Please like, share, comment, subscribe. Consider joining membership. And also, if you watch this after the live stream, leave a super thanks. I really appreciate it. You don't have to, but it would show some appreciation for what I do. Anyways, I'll talk to you all later. You have a good day. Till next time. Bye.